Hello, it is Milad and welcome to my channel where I share with you the best trading tips and strategies. In this video, I'm going to show you how to use two powerful indicators, ADX and CCI. These indicators can help you analyze the market trend and signals and make better trading decisions. Whether you are a beginner or an expert, you will find these videos useful and informative. So let's get started. The ADX indicator is a technical analysis tool that measures the strength and direction of a trend. It consists of three lines, ADX plus DI and minus DI. Here is a brief explanation of each line. ADX. This is a line to show the trend strength, regardless of whether it is up or down. It ranges from 0 to 100 with a high value indicating a stronger trend. A common rule of thumb is that trend is strong when the ADX above 25 and weak or non-existent when the ADX below 20. Plus DI. This is the line show the positive directional movement or the upward pressure on the price. It's calculated by comparing the certain high with the previous high and smoothing the result over a period of time, usually 40 bars. The higher the plus DI, the more the price is moving up. Minus DI. This is the line show the negative directional movement or the downward pressure on the price. It's calculated by comparing the certain low with the previous low and smoothing the result over a period of time, usually 40 bars. The higher the minus DI, the more the price is moving down. The ADX indicator can help traders identify trend change and entry and exit point and trade signals. Some of these ways to use the ADX indicator are crossover, divergence, and threshold. Crossover. When the plus DI cross above minus DI, it signals a bullish trend. When the minus crosses above plus DI, it signals about bearish trend. Traders can enter or exit trade based on these crossovers, depending on their trading style and risk tolerance. Divergence. When the ADX and price diverge, it indicates weakening trend or a potential reversal. For example, if the ADX is rising but the price is falling, it suggests that the downtrend is losing momentum and may soon reverse. Conversely, if ADX is falling but the price is rising, it suggests that the uptrend is losing momentum and may soon reverse. Threshold. When the ADX reaches a certain level, it can indicate a strong or weak trend. For example, some traders use ADX above 50 as a sign of a very strong trend and the ADX below 20 as a sign of weak or non-trading market. Traders can adjust their strategies accordingly, such as using trend following or range-bound techniques. Okay, let's see ADX on the chart. First, for add ADX on the chart, we go to indicator section here and write ADX. Well, if you click on it, you can see the ADX is come here. Well, Now here we have the ADX line is shows with blue line and DI plus with green and DI minus with red line. As you see, you can adjust the ADX DI with using this setting here, and well, here is the line that it calculate, and the threshold here. You can change the style, levels, and remove or add ADX, DI plus here. Well, now I don't touch this. Let's see if we have a good strategy with ADX. As you see, we are going to trade on the London or New York session. Let's start with New York session and London session. Okay, here is the start of the market in New York session. Well, I'm going to set my strategy here. If the ADX is about the middle of this channel and DI plus cross over the DI minus, we can enter for long trade. Or if the ADX about this level about 20 and DI minus cross over DI plus, we can enter for a short level, but it has a failure in some point. Well, let's see. Well, as you see, we can enter the trade here because the DI plus cross over DI minus and the ADX is about a 20 line. So we can enter trade here, but first I'm going to add ATR on my chart because I use it as my stop losses. And here, as you see, we can enter here for our trade because it is okay for our trading strategy. As you see, we are the 1.8 ATR. I'm going to use 2 multiply of ATR. It's around here. So as you see, we hit 1:2 risk to reward ratio. But let's go a little bit further. Well, as you see, we can enter the trade for a short here, and it hit our stop losses again. Well, again, we can enter for a long trade here, here. You know, enter for a short trade here. I use 2 multiply I of ATR. Well, it hit our target, and enter for a long trade again here. Well, it hit our target again, around 5. Yep. Okay, that's it. Well, it finished in the New York session. Well, you can enter for a short trade here, but I'm not suggest that because it is the close of the London session, and the momentum of stock market is losing. Well, let's see how it is on the London session. Well, as you see, we are here and we lose the momentum of the stock market. Well, I'll wait until the ADX go cross over this 20 line, and we can enter for a short trade here. Well, as you see, we can enter for a short trade here, and well, as you see, we have the 1.1 ATR, and I'm going to double it develop it. Here it's the double and 1 to 2 risk to reward ratio, and hit the target. Well, as you see, if I'm going to enter here, I can wait until the price cross over, and we can enter for our long trade here that it's in the New York session. The CCI indicator, or Commodity Channel Index, is a technical analysis tool that measures the difference between the certain price and the historical average price of an asset. It can help traders spot overbought and oversold levels, new trends, and divergence in price movement. The CCI indicator consists of a signal line that oscillates between 100 plus and minus 100. The CCI indicator can be interpreted in different ways, such as crossover. When the CCI crosses above 0, it indicates a bullish trend. When it crosses below 0, it indicates a bearish trend. Traders can enter or exit trades based on these crossovers, depending on their trading style and risk tolerance. Threshold. When the CCI reaches a certain level, it can indicate a strong or weak trend. For example, some traders use CCI above 50 as a sign of a very strong trend, and CCI below minus 50 as a sign of a very weak trend. Traders can adjust their strategies accordingly, such as using trend following or range bound technique. Divergence. When the CCI and price diverge, it indicates a weakening trade trend or potential divergence. Divergence. When the CCI and the price diverge, it indicates a weakening trend or potential reverse. For example, if the CCI is rising but the price is falling, it suggests that the downtrend is losing momentum and may soon reverse. Conversely, if the CCI is falling but the price is rising, it suggests that the uptrend is losing momentum and may soon reverse. Well, to add a CCI indicator, you can go to indicator section and write CCI. As you see, if you click on it, it comes here. Well, it had a setting. Well, we had two lines. We have the smoothing line and CCI line, upper band, lower band, middle band, and background is not important. You can change the input, HLC, open, high, close. I'm not gonna touch these. You can change the method, SMA, EMA, and the lengths. You can change the lengths too, but I'm not touching these, one of these. Well, let's see if we have any strategy for it. Well, as you see, if we cross over this line here, or if we cross over the moving line, we can enter for a long, and it should be upper than the middle band. And if the this smoothing line cross over the CCI line, we can enter for a short trade, but it should be in the middle of these. I mean, it's lower than the 100 line. So let's see if we have any successful trade here. Well, as you see, we can enter for a long trade here, and let me add ADX again. ATR, I mean ATR, ATR, and lower it. Well, it enters for a long trade a little sooner than the ADX. Yeah, well, it hits target a little sooner. While if we enter for a short trade, we had to enter here. Well, it hits the target again. I mean, it can complete ADX. Well, again, we had to enter for a long trade here because it crossover. Well, it removes here. It removes the trade here. While you had to enter trade around here for a short trade because we told you it. You should enter the trade if it is under this line. So, well, I don't know. Maybe it's okay. Well, we have another trade here. And it's successful. Well, another trade here for a short. You can enter here on the London session. Then let's go a little back. It's random. Well, we can enter the trade here, around here. Well, it hits our target, I think. It's okay. Yeah, it's a little more than the okay. Well, you can enter for a long trade here and hits the target again. It's not bad. You can count on it, but before you start in trade, you should have a more than one trade before you enter for a real stock market. Well, we have another trade here. It hits the target again. It's the good. Well, I think that's enough. Hope you enjoy it and it will be useful for you. And please hit the like and subscribe button and share this video with your friend. And before you enter for a trade, please do your study and take your responsibility for any trade. Thank you. See you soon.